FY22 trading update. So a few things. Demand remains really strong across the business. Right, that's really the point that I'd like to make. It's very strong. You know, we're getting our main customers wanting more from us more often across the range of services that we provide. Right, so our standing, our brand, our quality seem to be very good, and that's coming through by way of demand from our customers. There's no doubting that. And we can see that we're getting very strong contract awards and preferred status at the moment, which is excellent, which I'm very happy about. But we've had challenges in Q3. You know, this year has been quite tough, as you can imagine. Right, it's been probably the toughest year for most companies in most of their executives' living memory. Having said that, we're still very profitable, doing very well. In Q3, you know, as we spoke about this at the half year in February, weather has continued to impact across the Australian business units, most notably in roads, but also in utilities and also in facilities. You know, you just can't get away from it, but every business has got the same issue. You know, we're not the Lone Ranger here, and you'll hear more, I guess, as people speak about this particular quarter. We continue to do the work. Our service quality to our customers continues to be very good. So we're getting on and doing it, but it's more difficult. The cost to serve is a little more, etc. One of the new things, not new, but certainly a bit different from many companies that are Australian based, is because we've got a large New Zealand business. Of course, the cycle of COVID is a little different. Right, so we're seeing the Omicron variant hitting in Q3 as they opened up the economy or open up from restrictions, and so we've seen that also hit our New Zealand business, which is a little, you know, it's a lag compared to the Australian business. In many ways, that happened in Q2 in Australia, not as much in Q3, but it's a little later in New Zealand. Now, as we look at New Zealand, you know, the same situation. We've sort of hit the peak. We're now on the downward run there, and Steve will talk about this later when he talks about the New Zealand business in more depth. But look, you know, the worst is over, and that is going to improve over the course of the last quarter. When we tally up, you know, of course, always. You know, we have an eye on the impacts on the various businesses of COVID-19, and of course weather. When we tally those up, our best estimate at the moment is that that's $50 to $60 million as of the end of the third quarter. That's a big number. It's a big number. Our core year-to-date EBITDA is just a little off from last year. As you can see here, around 4.7%, but we are expecting a strong fourth quarter. Okay, so everything going well. Let's see how much of that 4.7 we can make up. So that's our current view at the moment. The immediate priorities, of course, earnings and cash performance for 22. You know, we'd like to finish on a really good note. Our business is skewed to the second half. Right? We do have a load of work in New Zealand in certainly the last quarter of the financial year, and the rest of our businesses are skewed that way as well. So we're very hopeful of a very good fourth quarter. We'll be managing, of course, the remainder of the COVID-19 issues. Yes, there are supply chain issues, workforce availability issues, which the guys will talk about as we go through the day. We're very focused in on contract pricing. Now is not the time to underprice your work. And in a very similar vein, it's also a time to be very careful about cost management, making sure that we're not paying anything more than we absolutely have to, and that we make sure that to the extent that those costs are increasing, that we're passing them on the price side. And of course, what that means, and you're going to hear from Peter Tompkins a little later about this, your pre-contract risk management has to be spot on. Right? Now is the time that we have to be very careful about this. You know, in many ways, this is a boom time for business and businesses like ours. And that is the time when many of those that aren't managed well go bust. So that risk management is very, very key. If we look through the noise, as we call it, of 22, there's a few things just to focus in on here. Our weighted average sector spend growth from BIS, right, 7 to 8% CAGR through to 25. As I say, our customers are spending in the areas that we are. We are in the right sectors at the right time. We're heavily leveraged to the new energy economy, and you'll see that today. And we do expect a strong rebound in earnings in FY23, and you would expect that. Of course, you know, we're expecting not to have the issues, anywhere near the issues of COVID-19, and we're expecting better weather patterns, but we certainly are expecting FY23 to be a better year. So I'll just touch on growth to net zero down as opportunity. So a net zero emissions future, and you're hearing a lot about this in the election campaign, but it will require just massive adjustments to almost all urban infrastructure, but particularly power generation, power transmission and distribution, energy management and transportation. Right, the numbers that are going to be spent in these areas, no one can calculate, they're too big. Right? We're right in the middle of this. So Downer's technical bent, right, is power. That's what we do. You'll hear today, we're the largest transmission builder, we're the largest in managing distribution networks, we're the largest electrical contractor. So you're going to hear a lot about that, but it's through power generation, transmission and distribution, facility management, public transport. All of these things are going to have to change dramatically, and we're right in the guts of it. We've also invested heavily in the circular economy. So you're going to hear a lot more about that. But in the meantime, I'm going to take you, Julie Wills, our head of sustainability, is going to take you through all of the fantastic things that we're doing on the ESG front. Right? It's very important. We spend, as I say, a lot of time and effort on this, and I think we do a very good job. So Julie, you're going to talk to us about that. Thanks.